Hello friends, Vladimir here, and this is the weekly review for 16th of June 2013. Last week was very interesting. We saw the Australian dollar and the New Zealandian dollar recovering almost during all week, as we predicted to happen very soon, except on Friday, which it started its retrace before the weekend. But we can say that it seems that the bulls are show their interest on the Australian dollar again, and the bears close their position, at least start to do that. Before I go over the new trades for this week, I would like to start with the US dollar index. As you can see here, we have very interesting situation. The US dollar index is moving. This is the weekly chart what I show you right here. This is the US dollar index. As we can see, it is moving inside a channel. We had one bottom, we have two on the top. Now it seems like we are going for three. We can actually put actually 20% from the bottom, 20% from the top of the channel, just to create insider channel, and we can see much more spots, right, as you can see here. So based on that, the US dollar still has some space, some place to go to the downside. But, and here is the big but, between these two lows, it's still very potential to create a bullish hidden divergence. More than that, there is also an insider trend line here. Except the channel, there is also insider trend line. If this trend line will not be respected and the US dollar continues to make the straight move, that's going to be band to band on pretty wide range. Last time it happened was here. We all remember how it affected right after that. Strong pullback. Now I will not be surprised if the US dollar will be able to create a bottom here and start to retrace all the way to the new high again. But that's pretty for a long run, so it's very early to make a decision. That's also will be very depends on Bernanke and his speech this week, and some more things which I will talk about a bit later. So based on the weekly chart on the US dollar index, we are in front of a bottom. I will remind you later why I started with that. Taking a look on a daily chart, we can see, you see that? That's a band to band, and now we're going for duplication, right? As you can see here. A band to band, not classical, but still band to band move, and we're going for duplication on pretty wide range. RSI coming closer and closer to 20. Last time RSI was 20 was here, and we all remember what happened right after that. So I don't claim that right from here we will see huge pullback to the upside. No, that's not my claim. But my claim is that the US dollar is coming to its bottom, at least for some period right here, and going to create a retrace. More than that, if you note here, that's a bearish convergence. So within several weeks, several days, maybe 2-3 weeks, I expect the US dollar index to start a push up right from here, maybe the next week, but from this range, a push up from here. Then we'll have to see and understand what's next. So why I started with the US dollar index, because now I'm going to the forex, and that's why I think we still should be looking well, maybe not still, but we should be looking for opportunities to sell the majors. Remember that. Okay, so let me start. The first thing I would like to start with will not be the Pacific pairs. That will be the majors, pound dollar and the euro dollar. Pound dollar, based on the weekly chart, looks very positive, right? It's breaking through the 20 MA, RSI is crossing 50, all good, MACD is still very bullish, but, and here is a big but, pound dollar between these two highs is still, as you can see here, right, under bearish hidden divergence on the MACD at least. Stochastic still has a bit more to go. That means that pound dollar could start its retrace down any moment, as the MACD histogram already in a bearish hidden divergence already. So we have several resistances here. Pound dollar might stop on each of them and start a push to the downside. How deep it will be, that's not, I still can't even see the bigger picture for longer run. I think it's very early and it will be depend on many things. One of them will be, I guess, shown later in several weeks from now on the US dollar index. But in my opinion, pound dollar is reaching its top. There are several things to pay attention to. 157 is very, very stiff resistance already. Same about 158. There is also a bearish trend line waiting for the pound dollar on this channel, and that's also in between 157 up to 158, maybe even 159. But here, that's a real top for this pair. I think that the pound dollar is coming to the top. It might happen any moment. It might happen this week or the next week, the week coming after that. I think that will be the top for the pound dollar. Watching on a daily chart, we have band to band. Now half of the move. That's a bullish convergence. So drop down to 20 MA or so could happen any moment. Stochastic is already overbought, and as I said, there are several resistances on this range. More than that, the pound dollar is still facing the 200 moving average, and on the 4-hour chart there is a strong bearish divergence. The question is that enough to start a down move, or will we push first of all to the 158, 159 or so range before making 3 up to 600 points correction to the downside? I don't want to predict. I think we should be on a sell for the pound dollar in this range and to get ready for a pullback, as I said, 3 to up to 600 points correction to the downside, and that could happen any moment. If you want to trade a 4-hour chart, you're very welcome to do that. It seems like the pound dollar right now is creating here some kind of wedge. Right, here we go. So it still can be like that, it can be like that. It still can, as I said, to move on the upside, continue with this monster divergence, more, and bam, make the down move right from there. But also, and that's, as I said, could happen at the beginning of this week, if the US dollar is actually about to make a correction, it could form a double top right here, and right from there start its drop down. I think in between 3 up to 600 points correction, depends where exactly from this correction is going to begin. If it starts right now, then something like back to the daily 20 MA, that's my opinion, that could be 200 plus pips from the current place, if that's actually going to begin right there. My opinion about the euro dollar is pretty much the same. On a weekly chart, euro dollar is still positive. 20 MA was broken, RSI crossing 50, all looks good, but also there are several resistances on the way. And there is updated trend line right, sorry, that's not the one. There is updated trend line right from here waiting for the euro dollar, and that's around 134.50, 135. Now, there's one thing about the euro dollar that we should always remember. Strong euro will ruin any potential recovery from the eurozone. That's why I think every push up on the euro dollar is an opportunity to sell with its next signs. Watching on a daily chart on the euro dollar, we can clearly see that it has a beautiful harmonical pattern. Based on this harmonical pattern, 135.60 or so, that's the top of this current rise. Euro dollar can start to drop down from any moment. Right from here, 134.50 could be the level, 135.50 could be the level, 136 maybe even. Right here on inside this range, and right from there we could expect a drop down on the euro dollar. Personally, I think the euro dollar is going back to 132.50, then 132, and then I think if it managed to break that, I think the euro dollar is able to make all the move again back to 129, hopefully to break it down this time. Again, every push up on the euro dollar is opportunity to sell. Remember that, right? The euro dollar cannot stay strong too long, as it will ruin every attempt from the Eurozone to recover. And that's not what Draghi and his friends will allow to happen. So in my point of view, right from here, maybe a bit higher, euro dollar is a wonderful opportunity to sell. 20 MA, logical first potential target. 132.50, 132, that's the range as a first target. Then, if it managed to break it, we could expect much more. Going now for the Australian dollar and the New Zealand dollar, then I want to discuss about the crosses. New Zealand dollar surprised with its power. As I said, based on the monthly chart, I still can see more of the New Zealand to go to the downside, but it's for a long run. Watching back now on the daily chart, we're moving up, and even though during Friday we got a pull back, it still, as you can see, holds above the 20 MA and the current support, which is 0.8040, 0.8030. It still holds above. MACD is still very, very bullish, and stochastic is looking to cross to the upside of the middle, right, at the 50 level. RSI also seems trying to break at 50 to the upside again. Will that happen? Well, based on the weekly chart, and it's wonderful engulfing, there is more to go. So I would say every pullback to the downside should be opportunity to buy the New Zealandian. There is a trend line, and there are several resistances right here. This is the first one, 0.8150, first one, and then we have the 200 moving average and a trend line meeting. So I think every drop down here is an opportunity to buy, and I think it's going up to here and up to here right after that. From here, most likely, and that's based on the US index, as we remember, it's going to the downside again. So, to make long story short, I think still up, then within several weeks it's going to be to the downside. More than that, this is the 4-hour chart. This is for the first time a bullish convergence, as you can see, between every two high. Every drop down is the opportunity to make a buy. Actually, that could be the 20, it might be a bit lower. Looks like we have still chance to go higher. For the New Zealand dollar, right to the levels where I was talking about before. Australian dollar, I could predict pretty much the same story. Watching on a weekly chart, we had a beautiful kicker. After the bearish convergences, we still could go a bit higher. I still think that Australian dollar is able to go and reach the 0.98 again or so, maybe even a bit higher than that. After that, we should be looking for opportunities to sell the Australian dollar. Same story as the New Zealand dollar, just one problem. The New Zealand dollar closed above the 20 MA on the daily chart. Australian dollar does not do that, but MACD histogram is very positive, stochastic as well. I would go and I would make a clear note here. As long as it holds above the 0.9450, I think it's to the upside, and the Australian dollar, based on this convergence it formed right here, still has room to go higher, and I think it will. Right now, this is inverted head and shoulders. It could go and make a retest here, make a stop, and push up right there, going to the previous high for the at least. Then it might take us even higher. As long as 0.9450, which is also the previous gap area, holds, I think we are going to the upside. If this will be broken, we will have to be careful again. That's my opinion. Now about the crosses between these amazing pairs. I've been talking about the Euro Aussie and the Pound Aussie opportunities to sell. I've been talking about that for 2-3 weeks, maybe a bit more. Last week, for the first time, we got the pull down from 142. The question is that it? Probably yes, watching especially on a weekly chart, but here's the big but: monthly chart is very, very, very bullish still. There are several resistances on a monthly chart right here, 144, 142, 144. It's very, very stiff resistances. I think, as I said, for a very long run, Euro Aussie is for a very long up. But I do think right from here, maybe in June, July, August, we will see some pullbacks These pullbacks could take us to 136, to 134, maybe even 130. Right after that, I think that will be the all, and we will continue to the upside. On a weekly chart, again, several resistances, extreme divergence, new MACD high, RSI around 80, was 80 at the beginning of the week. Pullback, so in my opinion, it still can play around the same highs. 1, 2, 3 more weeks, then to the downside. Or alternatively, it could make it straight to the down. Watching on a daily chart, this is a classical situation now to pull back to something like 140.50 or so, creating here some flag, 1 to 3 days, then make the break to the downside. As I said, I think 136 around that will be the first target, 134 the second, 132, 130 range will be the final bottom. We have more than 20 candles right on the Bollinger Bands, and that's why I think within several weeks it is going to close the Bollinger Bands and do that. Same about the Aussie franc, which I think is an opportunity go to the upside. On the monthly chart, just broke below the Bollinger Band, so it still has more to go for the long run, but based on the short term, you can see there are several supports, important supports on this pair. RSI is around the bottom, very strong bottom, and we have a bearish convergence, which means, first of all, we could expect a pull back. Watching on the 4-hour charts, there was a bullish convergence between every of these highs, which means the pair is still able to continue higher. That looks like a double top, which now is being retested. We could see a pullback right from here. And as I said, I think we have more to go. There's a wonderful trend line that could take us to 0.90 or so within several days. Well, we'll see how it goes, how it moves. Only if it breaks below 0.87, that would be a warning sign. Until that, every drop down is opportunity from my point of view to buy, as I think exactly as the Euro Aussie, it still first of all should close the 20 MAs to the upside. Correct, then I will expect it to continue down. Same of course with the Pound Aussie. I don't have nothing additional to say about that, but I have the same opinion. Pound New Zealandian. Well, you know how many times I was talking about this pair to the upside, right? I said be ready to hold it as investment for very, very, very long run. I'm still on the same opinion. But pay attention what we have. We have a trend line right now. Here, Pound New Zealandian, sorry, bounced right from there. On a daily chart, it's bouncing for 2 clear bearish days. Even with this hammer, all the indicators still showing to the downside. But I think if you miss the trend for the first time, you should be jump in already and hold it as an investment. It does not mean that it cannot go lower, down to 192, down to 190, maybe even 188. It doesn't mean it cannot, it could. But based on all the analysis and the retracement, it might be a wonderful opportunity to jump in already. Hold it, despite the fact it still could push a bit lower. Every low here will be just an opportunity to increase more for the buys. And that means if you jump into the trade, or if you just closed our previous long we predicted some time ago, and you want to rejoin the train, then look for opportunities to buy. And this hammer still could be a nice chance to jump in, but as an investment, it doesn't mean it cannot go lower. It still could, but as I said, from my point of view, it will be just an opportunity to increase some buys. And now we come to the yen pairs. From manic to panic, that was my last post on the blog. I hope you had a chance to read that. If not, just go to the blog here. Right here you can find that. That was the one I was talking about. And the idea is that the yen pairs, if you remember several weeks ago when I was talking to Shore, that right here, you don't want to know what emails I got. The bottom line was why I'm so crazy to go against such clear intervention. Several weeks after that, I start to get emails, Vlad, what should we do? It's dropping like a rock. Well, it definitely does, but it's good. It's good position closing. And personally, as I said, I do not think the Japanese bank will let it go too much. And don't forget, they're not alone. Ben Bernanke could save their butts. I'm sorry to talk like that, but he could do that before Kuroda or Abe just sneeze the next time. Talking for the longer run, dollar yen after over 20 candles ride is going to complete most likely this wonderful band to band move. I think that the dollar yen is still able to go even to 92, maybe even a bit lower. Maybe, that's a bit under big question. Why maybe? Well, first of all, we have a bullish convergence on the monthly chart, which means every drop down is an opportunity to buy. As for the long run, most likely that the dollar yen will go higher. I personally think it's still able to take us back to this trend line, which is 105, maybe even higher to the spike around 110. It's also able to break it up again with all the intervention they plan to make. For a few more weeks, I think it could still play on the bottom. Personally, I have buys, and right here I plan to add more buys. This pair is not a pair to trade. This pair is a pair to invest into. If you want to be in, get ready for volatile moves and don't afraid of them. If you don't want to deal with that, simply avoid investing in these pairs. I said it not once. That's investment. Okay. I remind you, I was talking about a sell all this way. I was talking about a sell. Here is the drop coming much faster than we expected. Between these two lows is going to be a bullish hidden divergence. Where exactly it's going to be created? Well, on the histogram it's already there. It could happen this week. It could happen in several weeks from now. But right here, as I said, I think it's creating a clear bottom. On a daily chart, we have a Bollinger Band duplication and RSI coming closer and closer to 20, which means a lot. Don't forget my megaphone. This now is being broken. Based on that, it still can go to this level, which means between 90 to 92. Right there, it is creating a monster bullish hidden divergence, coming closer and closer to the 200 moving average, coming closer and closer to extreme divergence, and here. This is why I think dollar yen is about to create a bottom very soon and is about to start its retrace to the upside. Right now, the panic around it is acceptable. I don't think the Japanese government, with all their plans, will allow that to last too longer. Talking about the dollar yen, it will immediately affect on the Nikkei, of course. Watching the Nikkei, there is a monster bullish convergence. Every drop here is an opportunity to buy. Yes, it still could push a bit lower, but then it most likely will continue to the upside again. Watching on the weekly chart, same story, over 20 candles ride. Now it's dropping down. It could stop right here. It could still continue a bit lower, something like 11,600 or so, creating a bullish hidden divergence, and right there, bam, flying all the way to the upside again. How it could affect on the other yen pairs? Well, as I said on previous week, it could be go and be a head and shoulders. Okay, time will tell if I was correct or not on euro yen and of course on the pound yen, which is here. Okay, time will tell if I was correct or not. Watching on this chart, it still looks like it has more to go to create an extreme divergence or just to build a continuing divergence right after that. RSI could go to its extreme. So again, I was talking about these pairs. We still have more to go. But, and here is a big but, friends, start to buy for as investment for the long run. Don't buy the next trades close to each other. One here or two here, then only around this support, like 140 or so. Okay, they have enough space, big space between the buys. It's like an investment. Make something like that, 1,000 pips or more, to be 1 or 2 maximum percentage risk from your account. That's the idea of investment. If it's too much to you and you cannot psychologically deal with that, friends, please avoid it. No one forces you to trade this way or invest. If you cannot do that, just simply avoid it. Okay, that's very logical. And right there, one of these stops, I expect a bullish hidden divergence to be created and a new rise to happen. Watching on a monthly chart, there is more to go, and I think it's just the beginning for pound yen and for the euro yen, of course, which created a bullish convergence right there. Every drop down is an opportunity to buy more. I think euro yen is able to go to 122, it's able to go to 120, it's able to go to 118, 115. Right from there, I expect it to make a stop and pushing it all the way to the upside again. Personally, I think it's going to stop on this trend line. But it's a personal prediction. Let's see how exactly it is going to act. So far, I think it still has a chance to go lower, but friends, please note and remember, during Monday and Tuesday, G8 meeting. During Wednesday, Bernanke will hold a press conference. After the central bank of the Federal Reserve will report their economic projections, and they will report their statement. Right after that, on Thursday, no, sorry, I think it's on Friday, Kuroda speech. Yes, it's on Friday. Kuroda will hold his speech. Too many things are going to happen this week that could affect the yen pairs. Stay tuned for any updates from there, from the fundamental zone that could affect the pairs immediately. Okay, and remember, do not trade these pairs as they are too volatile. Invest in them if you want to be involved. Just a quick update. I was talking about the dollar ZAR and the dollar Turkish opportunities to the downside. Dollar ZAR, I think, still able to go lower right now. Most likely it will create 1-2 candles flag. Could push to the downside, go take us back to 970, then maybe 960, maybe even 940. Not sure if right from here. If and only if it will break and close again above 1005, dollar ZAR is able to push to 1040, 1060 again. But as I said, I still think it's able to take us to 970, 960 or even 940 before the correction, before this down move to end. Pretty much the same about the dollar Turkish, which still has room to 184, 182, maybe even 180. But Turkish is too much affected with all the, with all the political things going there. Same about the dollar ZAR. So these pairs, as I said, they are more like investment. That's how I see that. It's more like investment. Invest in something. Enjoy the swap for a very long run, for several months. It could just bring you extra profits just from the swaps. Well, that's all pretty much, friends, for this week. All other pairs like Euro franc and other opportunities I was talking about the previous week they still stay the same. I don't have anything else to update or to say about that. Uh, just one last thing for the commodities traders of you. I think the natural gas could be a great opportunity. On a weekly chart is going to build a bullish hidden divergence somewhere here on this range. Um, on a daily chart, it's creating a continuing divergence. It still could create another low, another divergence, another low. Several supports on the way, like 360, 340, maybe the gap close 330. Each of these levels is opportunity to jump in, to add more to the buys, and I think that here the natural gas is creating a bottom and will start another push to the upside for longer run. That's all for this week, friends. Thank you very much for watching this video. I appreciate your time. Just to the end, my colleague Laszlo Hun just opened the doors to his signal service in his club. I want to take this opportunity and to wish him the best luck. He's a wonderful trader, and he's more a trader, not investor like I do, with all my crazy trades for the long run. He's more like a trader. So I just can wish him the best luck. Laszlo, if you hear that, good luck, brother. You deserve the best, and your followers deserve to enjoy your trades. Once again, friends, thank you very much for your time watching this video. I wish you a wonderful week, good trading, and I see you next on the next week as well. Yours, Vladimir Ribakov.